Welcome back to Who Wants to Be an Accounting Millionaire, powered by Financial Sense, where taxes are serious business, but today we're getting seriously weird. I'm your host, Drew Carrick, also known as Petty Cash, the rapping CPA, a man who chose to be an auditor because he took one look at the tax code and said, yeah, I'm writing this off. Today's episode dives into the most bizarre, outrageous, and eyebrow-raising deductions and loopholes the tax world has ever seen, as well as some tax code. Because there's only one thing accountants and taxpayers have in common, it's the hustle to find the deductible. So let's meet Karl Strube, our guest and his perhaps top employees.
That is right, you know it, Drew. Yes, I'm Karl. This is my daughter, Nora. Nora, how old are you?
7.
And William, how old are you?
5.
And then we have Gloria here. She's 1.5. Yes. Yeah. These kids are my Y, along with my lovely wife, Heidi.
And they're cranking out the tax returns, I guess, right?
Oh, you know it. You know it. Yeah, yeah. This one handles the S corps. We have William take the 1040s.
Oh, that's amazing. Perfect. Yeah, it takes an army, as they say, right?
Yes, it does.
So, all right. So, Karl, so tell me. Let's get a little bit of background on yourself. Where are you located? What do you do? Where do you work?
So I am located in Fresno, California. And I am, pretty small firm, in the scope of others. I started my career at Deloitte.
Okay.
Very grateful for my Big Four experience. And so 5 years in audit. I did 5 years in private industry as a controller at a couple different agriculture companies. And then I struck out on my own, started a tax firm. And I've been doing that for 10 years now. And just last year, I niched down my firm into equity compensation. So RSUs, ISOs. And I'm able to primarily work from home and just be a pretty involved dad. I'm very grateful for that. And and then as far as my firm, my team, I have a part-time admin and a part-time junior bookkeeper to help some of our business clients.
Even more junior than the juniors that you had, or maybe they're a little more senior than that.
A little bit more senior than that.
That's good. That definitely helps. So tell me about the transition to go from, because working in audit, a lot of the times, I feel like most of the time you don't see too much of that crossover to then get into the sort of private tax section. So how did you make that transition?
It happened on a whim. It was. Well, first off, now this far into my career, I recommend that any student go into audit first. Auditing made me a better tax pro. Just the way I look into the numbers, the way I know how a chart of accounts flows and the balance sheet and the P&L. A common phrase in accounting is the balance sheet is where the bodies are buried. And so, even when I'm dealing with the sole proprietor's Schedule C, where we only report the P&L, like I ask for the balance sheet because I want to see, does this make sense? But yeah, the way it started was a friend of mine came up to me while I was in my private industry days and said, Karl, can you help me with my taxes? And I just started helping friends do this. And then I got married. And this same friend came to me and said, hey, Karl, I know you got married. It's okay if you don't have time, but would you be able to help me with my taxes? And so I go out and ask my wife, hey, are you okay if I go over to John's house on Tuesday to help him with his taxes? And this is the brilliance of my wife. I married very well. She just looks at me sideways and said, couldn't you get paid for this? Because I didn't want to be a ghost preparer. I was not accepting compensation. I didn't have a PTIN at the time. I would sit with them and just be their emotional support person through TurboTax. No compensation. And so then I looked into it. Since I already had my CPA license, I got my PTIN. I structured all my continuing ed to tax. And then I ended up leaving that second controller job, and I started doing contract work for local firms that needed tax help. And so I worked for 5 different firms in Fresno, getting my work reviewed, getting feedback, getting those inside perspectives on how this really works. And that was the launch for me starting and for me moving into tax.
So what were the first tech stacks that you used for that? Because obviously I think back in the day everybody's filing these massive paper returns, and then you kind of move into the world of having digital abilities to file taxes in a lot more efficient manner. So I mean, I imagine if you're contracting out, were all these places using different ones, so you had to learn to use several different tax softwares?
I did, and that was game changing. It leveled up because I had hands-on experience using each of these. So I have used, I would say, almost all of the major tax softwares as a direct hands-on user, not just demos, and I'm so grateful for that. So my tech stack currently is Lacert for tax prep, and TaxStone for my practice management, Ignition for my proposals and billing software. I use OnceHub for scheduling client meetings, and let's see what else. What else is in my main? Like there are a lot of ancillary ones.
Yeah, for sure.
Tax help software for pulling tax transcripts.
So what type of clients are you, do you have a stereotypical client type, or is it just the whole gauntlet?
When I started my practice, I was more of a generalist, and so it was pretty broad range. I didn't want to niche down because I liked the variety of working with different businesses, different individuals. And so now in the last year or so, I've niched down into equity comp. I'm finding that's where I'm having the most fun, and I can bring the most value. I understand how those RSUs, those ISOs, non-qualified stock options, ESPPs, the strategy in those, there's a lot of moving parts to a taxpayer situation, and the levers we can move when we plan on the front end are incredible. And so I'm just having a lot of fun with that. And so those are more of the clients that I'm trying to attract and market to now.
And it's probably a big market and growing market with all these tech companies that, of course, issuing all the different options. I know I'm one who has options in tech companies that I've worked at. So there's definitely a growing market of people who don't really understand how it's going to impact them in the future, but they know that they want it and that they have these options. But obviously, getting the advice on the front end on how to prepare for whenever they do execute and whenever they do pull all of those things.
Yeah.
Cool. So with that being said, are you ready to get into the rules of the gameplay?
Let's do it.
All right. So you'll answer 10 questions, with each question getting harder as we go about. The prize money, of course, will increase as we go. So it'll start in lower increments of $10 and eventually work its way up till eventually the last question you'll be playing for the final $1,000 grand prize. There are safety nets along the way. It's at question 3, which will lock you in at $30. So at least you're going home with a few cups of coffee. And the second one being question 6, which gets you at least, a good holiday gift for one of the kids. And as you go along, like I said, the questions will get more difficult. In the event that you do get a question wrong, but you've already passed one of the safety nets, you'll drop down to that safety net value. If you get it wrong and there's not a safety net, then you'll drop back down to 0. But the good thing is regardless of where you drop back down to, you will still continue playing. We will answer all 10 questions, and each question from there on will be worth a flat $10. So no matter what, every question moving forward, you'll still have another $10 on the line that you can accumulate. You will have 3 lifelines. You can use each only once. One of them is a switch the question, which is if you don't like it, you trade it in. We'll give you a question. Could be more, could be less difficult, but if you really have no idea what the answer could potentially be, maybe you just swap the question out and we do have an alternate available. The other one is 50-50, which is pretty straightforward. We'll eliminate 2 of the wrong answers. And the final one will be the bookkeeper's hint, which is where I will give you a helpful or not very helpful nudge in the right direction, depending on where along the line it is. It is completely improv and ad-libbed, so everybody take it easy on me. And if you do find your way getting through all 10 questions without ever getting one wrong, you will win the full $1,000, which is what we have as our grand prize here on Who Wants to Be an Accounting Millionaire. So hopefully you know more about taxes than I do, having come from the audit line. And the only question I have for you is, if you win this $1,000, what would you do with it?
Well, we are looking at a Disney World trip with our kids, and so this will go. This won't cover that Disney World trip, but it will definitely pad the vacation budget a bit. And we'll be very grateful for whatever it is.
Let's see if we can help support this Disney trip and get into the game.
All right.
So starting off with question 1, which U.S. federal agency is responsible for collecting taxes? Is it A, the SEC, B, the IRS, C, the DOJ, or D, the FBI?
All right. I'm feeling pretty good on this one, so I think I'm going to go with B, IRS, final answer.
IRS, final answer, and that is correct. The IRS, America's least favorite pen pal. And of course,
That is so true.
we're starting off with the easy one. So we like a positive momentum as we get going, but we'll keep the egos in check as we continue to go along.
Oh, yeah, staying humble on this one. I know how quickly it can turn.
Okay, so you've now earned $10. You still have all three of your lifelines available. We'll be moving on to question number 2. Question 2. What is the IRS's official nickname for suspiciously aggressive tax positions? Is it A, red flag deductions, B, frivolous positions, C, risky filings, or D, overreaching claims?
This is a good question. I can see the idea behind these, but I feel pretty confident in this one. That it's B, and that's really because the other ones, or at least A and C, or A is very much like a social media taxpayer side. We talk about what are red flags as far as how we perceive that our own positions we take, and C is a little too colloquial. And D doesn't seem like it, I guess I would say it's not that wouldn't fit a legal term. And so that's why I'm going to go B, final answer.
B, frivolous positions, is correct. The logic there checks out. Definitely some of those things sound like they might be more what you'll find on Twitter or Instagram than what you'll find in a legal document of some sort. So that was a good way to deduce it. So, frivolous positions, legalese for, we're going to audit you first. So you've now earned $20. You still have all three lifelines. You have the logic. You're on track. We're making moves really quickly here. And this third question will be for your safety net. So if you get this right, you'll at least be locked in with the $30 to take home, which will get you about half of a chocolate chip cookie at Disney. All right. Question number 3. Which cosmetic surgery was ruled a tax deduction business expense by the IRS for an exotic dancer? A, Botox, B, breast implants, C, a nose job, or D, teeth whitening?
Thankfully, I have heard of this one. This one makes the rounds in the tax code oddities. Yeah, so I'm going to say B, breast implants, final answer.
B, breast implants, final answer is correct. It is breast implants. Turns out if it's necessary for work, Uncle Sam might just put part of the bill, strictly for business purposes, of course.
And the nuance of that we try to tell our clients is it's facts and circumstances. Yeah, like you said, it has to be related to your business. And just because that thing was deductible for one taxpayer doesn't mean it's going to be deductible for the next taxpayer. And that's not the whims of the IRS so much as what's the letter and spirit of the law. And that's sometimes a hard thing to get across to our more aggressively minded clients.
Absolutely. And I mean, I think it's only a matter of time before you start to see all the floodgates of OnlyFans tax clients getting to all of these different locations, and I'm sure that opens a whole whirlwind. I mean, the world of content and social media really muddies the water and blurs the line of what's necessary for livelihood and work, and what are the full, like you said, facts and circumstances. So you've now passed the safety net for question 3, which locks you in at the $30 minimum. That's a good benchmark to have finally hit. So you can breathe easy as we get into the next question. Question number 4, this is where things start to get harder. Which everyday expense has not been allowed as a legitimate business deduction? A, cat food for pest control. B, swimming pool for arthritis therapy. C, a guard dog for security. Or D, personal dry cleaning costs for clothes.
This one is getting a little bit trickier. I'm trying to think of which ones I've heard of as, through the years. And so I'm pretty sure that the answer is not C, guard dog for security, and B, swimming pool for arthritis therapy. That I could see that being a medical expense deduction. So I'm down to A or D, and what's really throwing me is pest control would be a legitimate business deduction, and especially like personal on there, like getting your personal clothes dry cleaned, like everybody still has to get dressed and you choose whether you buy clothes that need dry cleaning. So I'm gonna go with D, personal dry cleaning costs, for final answer.
Locking in D, personal dry cleaning costs. And you are correct. Personal dry cleaning costs, nice try on the dry cleaning, but unless that suit's doubling as a PPE, the IRS says no can do.
And what PPE needs to be dry cleaned?
Right.
It better be robust enough to handle the washing machine.
Oh, yes. Okay, so you have passed question 4. That brings your total earnings up to $60. You still have all of your lifelines remaining. I think you're in pretty good shape now as we enter the midway point of the question asking. Your next question is for $120. Like I said, you still have all your lifelines remaining. We've got question 5 coming up. What is the nickname for the tax loophole hedge fund managers use to defer income taxes? A, the step-up loophole. B, carried interest. C, the wash sale rule. Or D, the Dutch sandwich.
Oh my gosh. All right. Well, I feel pretty confident that it's not C, because the wash sale rule isn't a nickname. And so with that logic, I'm also feeling like it's not B, it's not carried interest. I think I'm going to go, I want to use one of my lifelines. I want to use the bookkeeper's hint.
Okay, so I wouldn't get too tripped up by the whole concept of nickname. I wouldn't read too far into the nickname, and it's more so just the term or the actual strategy itself, or the technical concept that enables hedge fund managers to defer income taxes. Because I know it sounded like the whole nickname concept seems like, well, does it have to sound like a nickname? It does not have to sound like a nickname.
Okay. All right, so that's leading me back to being B or C. So I'm going to go with B, carried interest, final answer.
Locking in B, carried interest, as the final answer. And I'm guessing that the bookkeeper's hint actually was helpful this time, because B, carried interest, is the correct answer.
So I don't know what I'm going to study now and for my next, what I'm going to look for a CPE course next.
There you go. Carried interest is where billionaires save billions and the IRS carries the frustration.
Okay. All right. There you go.
So you are moving along here. You've now earned $120. You've used your bookkeeper's hint. You've passed question 5. We're now on to the harder half of the questions as we approach our $1,000 grand prize. This is where the questions become exponentially more valuable as we go along. So if you're ready to keep playing, we can keep playing, or you can walk away with what you got.
No, I'm here to play and just try my best and have fun. So.
Okay.
Worst case scenario, I walk away with, you said the martinis were $20. I got 1.5 martinis.
There you go. And question number 6 will be for the $250 safety net. You're already locked in at the $30 safety net. So this is a big question here to reach that next tier. So with that being said, we'll go on to question 6. Which of these strange deductions was not allowed by the IRS? A, body oil for a professional bodybuilder. B, the cost of a private airplane for business travel. C, vitamins as a general health expense. Or D, home office deductions for a freelancer.
Right. Well, I know the answer is not A. I've read up and heard of that one. Like similar to the earlier questions about facts and circumstances, and for that business, for that job. I'm pretty sure it's not B, because I could see some businesses where that private airplane could be rationalized. Wouldn't be across the board, and I feel like home office deductions, it isn't that strange even for a freelancer. Like if you just need a dedicated space. But so that's why I'm leaning towards C, because the whole idea of medical expenses is it needs to treat a specific condition. And so vitamins, I believe they improve our overall health, and they should be a medical deduction. But so, I'm waffling on that because you can get a doctor's note about specific. Oh, but general health expense. Okay, that's it. I'm going for C, vitamins. Final answer.
Locking in C, vitamins, as a general health expense as the final answer. And your deduction process is correct. It is C, vitamins as a general health expense. Those are not allowed to be deducted by the IRS. Vitamins, nope. The IRS says pop a multivitamin on your own dime. We're not covering that. And I do agree with you, though, is because it's general, health and upkeep. But then, you start to wonder, well, what qualifies as a vitamin? And I'm sure that would be a whole other, process of debating what qualifies as a vitamin or not.
The pyramid schemes have entered the chat.
Absolutely, yes. That would 100% fall right into that. And everybody would be marketing that, oh, you can deduct this. So you have passed your second safety net. You've earned $250. That is locked in now. So you're going home with probably enough pistachio gelato martinis, more than what you'll need over the course of that trip. But this gets you, I think, into one of the parks for a day, plus maybe the little flash pass, right? So you still have two of your lifelines remaining, the 50-50 and the switch the question. Two very useful ones, I would say, to have as you enter the home stretch of the final 4 questions here. All right, so enough of the banter on this. Let's get into your final home stretch of questions here. So like I said, we've got 250 accumulated. This next question will be up for you. Question number 7. What musical instrument has been allowed as a medical deduction to correct an overbite? Is it A, a clarinet, B, a flute, C, a trumpet, or D, a saxophone?
All right, let's see. I'm pretty sure it's not flute because I play none of these instruments. I play a little bit of piano, but just friends and a little bit of music exposure over the years. I know that you're not supposed to. You wouldn't put your mouth on the flute in a way that would change your overbite. And so I'm thinking about I have it down to clarinet and saxophone. Those are the ones where you would put the mouthpiece in your mouth. I think that could affect it. And I want to say I've heard of this, and so I'm feeling pretty confident. Let's go for clarinet. A, final answer.
Okay, locking in A, clarinet, final answer. Still have 2 lifelines available, and A, clarinet is the correct answer. Orthodontist, $5,000. Clarinet lessons, tax deductible. Playing hot cross buns poorly, priceless. So yes, the motion of the clarinet actually does help correct the overbite, making it a valid medical deduction. So that is definitely one of those interesting trivia ones that everybody can whip out at the next party.
Yes.
So you have now accumulated $400. So the stakes have gotten higher. You have 2 of your lifelines available. You still have your safety net of the 250, but you now have achieved 400. You'll be going for 600 on the next question. Before we ask you that, though, we want to ask if you want to continue playing or take what you've got and walk away.
Let's keep playing. My more conservative nature of just a bird in the hand wants to say walk with that 400, but let's see where it goes. Yeah.
All right. We're flying through these like a 1040 on October 15th. If you're ready, the last 3 questions. Question number 8. Which section of the Internal Revenue Code governs hobby losses, disallowing deductions if an activity is not engaged in for profit?
Okay.
Is it A, Section 199A, B, Section 183, C, Section 179, or D, Section 1231?
All right. Well, I know it's not C 179. That's related to depreciation. 199A is for qualified business income, so that wouldn't be it. And wouldn't be 1231. That's related to property, and so I'm going to go with B, section 183. Final answer.
And before the show, you were concerned about, I don't know how much I know about the Internal Revenue
Yes.
Code and all the nuances of it, but B, section 183, is the correct answer. Section 183, where business of breeding alpacas for Instagram fame gets downgraded to a hobby. No deductions for that shit, Chief.
Yeah.
Okay, so with question 8 passed, we are going on to the final 2 questions. You have you have 2 out of your 3 lifelines available, the 50-50 and the switch the question. You have earned $600 so far. Do you want to keep playing or do you want to walk away?
Oh, we're too close to stop now, Drew.
Okay. I think he, calculated inside and said, okay, I got 2 lifelines left and 2 questions left. I'm going to give me a good shot here. So, question number 9. What is the IRS Form 8275 used for? A, requesting an installment payment plan. B, reporting positions inadequately disclosed on a return. C, requesting a tax refund. Or D, filing a late return.
Now, see, I know this one because I have used this form.
Really?
So it is not for an installment payment plan. It's not for a tax refund. It's not for a late return. And so it's B.
All right, getting out and in front of the issue before it arises, so that you could be like, look, my intention here is completely from the goodness of my heart. So B, reporting positions inadequately disclosed on a return, is the correct answer. You knew it right away. Form 8275, basically waving a flag that says, hey IRS, this one's spicy. Throw that on hot ones. Okay, question 9 has been passed. You still have 2 lifelines going into the final question. You've earned $800. I'm not even going to bother asking. I know that you're playing for it because you've come this far. It would be absolutely devastating if it turned around here and landed back at the 250. But it sounds like we're in a good position to make that Disney trip a little more enjoyable. Are you ready for the final question, number 10?
Bring it. Let's do it.
Which tax code section allows businesses to depreciate livestock used for breeding? Is it A, section 179, B, section 1245, C, section 199A, or D, section 1031?
Okay. I feel pretty confident. It's not 199 Cap A. And it's not 1031. So for me, C and D are out. I know section 179 is about depreciation. Where I'm a little bit fuzzy is is 1245. Like, which one would? I don't know if that touches that. Those are. Man, I really hope I'm not embarrassing myself in the annals of YouTube forever with my peers.
and you do of course have your 2 lifelines left, though one of them I'm not sure how useful it would be.
Right. I'm feeling pretty solid that it's A, but you know what? I've got the lifelines, so let's do 50-50. Let's see if A or B disappears, and I can feel more confident.
Well, unfortunately, the 2 wrong answers are C and D, so you're left in the same position between A and B.
You know what? I think I want to use my last lifeline. I don't want to gamble on this, so I'd rather gamble on a different question. Let's switch the question.
Okay, let's switch the question. And for the record, as far as the answer to question 10, what it would have been is B, section 1245, where cows become assets and accountants become legends. So that might turn out to have been a good decision if you do end up getting this right, had you been leaning to A. So, for the alternative lifeline question, it is, which of the following pets was successfully deducted as a business expense? A, a cat, B, a dog, C, a parrot, or D, a hamster?
as a business expense. See, that's going to be the nuance here, because some of these could easily be medical expenses, and so that's why I feel like it's not dog. Oh, I think I'm going to go with B, dog.
Locking in B, dog, as the final answer. And unfortunately, it was a cat. When your cat earns their keep, meows the time to claim them. You think you had your gut initially saying,
I should have gone with it.
The pest control, which was correct. The good news is you're still walking away with $250. So that is somebody's ticket to get into one of the theme parks for sure. Perhaps the day hopper pass. You did a phenomenal job. I feel like this was an exciting, on your edge of your seat the entire time type of situation. So I hope you had a good time at least.
Yes, I did. Thank you, Drew. This was awesome.
Great, Carl. And that's a wrap on tax code oddities and weird deductions. From cats to clarinets to carried interest, one thing's clear. When it comes to taxes, if you can dream it, someone's tried to deduct it. This has been Who Wants to Be an Accounting Millionaire, brought to you by Financial Sense. I'm Petty Cash, the rapping CPA, reminding you the tax code may be complicated, but creativity is free. Stay sharp, stay compliant, and stay tuned for future episodes. We'll see you all then.
Thanks, Drew.